Welcome back to our special show, Quarter Se Quarter Tak. We have been looking at how the various sectors may perform in the earnings season that is already underway, and how might we pick the good from the bad and the performers from the non-performers. We have discussed several sectors. We now move on to the oil and gas space. It is expected to be a mixed quarter for the oil and gas space, but standout performers could be names like Petronet LNG, as LNG prices have fallen to multi-year lows and they have been able to renegotiate, as we know. Varinder is here to tell us what we should watch out for by way of trends. Varinder.
Well, clearly, oil and gas will be one of the most interesting sectors to watch out for. I'll start with the upstream companies straight away. It could be a disappointment because the crude has fallen 20%. For ONGC Oil India, there's no hope this point of time. If you watch out for the net realization post-subsidy, for ONGC, people are expecting that it could fall to nearly $34.50 per barrel from $44.50 per barrel. In Cain India, watch out for other income due to substantial redemption of FMPs in Q4. Also on the downstream companies, which is HPCL, BPCL, IOC, people are hoping that there will be, good results this point of time. But there are a lot of variables in downstream companies like Singapore GRMs, which are down nearly 4% quarter-on-quarter. Inventory losses, whether there are any inventory losses in this quarter or not, that is an important point to watch out for. And marketing margins are important to watch out for. Diesel retail marketing margins were down 11% quarter-on-quarter. But still, HPCL could be one which could be, best among the lot in terms of earnings coming ahead. So watch out for that. IOC, watch out for the Paradeep refinery commissioning. That could be important. Most of the people on the street are believing that, OMCs could report GRMs anywhere between $5 to $6 per barrel. So that is a key mark for you. Anything above that $6 per barrel will be positive for most of these companies. Dark horses could be MRPL and Chennai Petro. Keep an eye on them. Gas stocks, that's the place where you got to, keep an eye. They could see the best results in oil and gas space. Spot LNG prices are falling down, demand is picking up, and the capacity utilization for most of them have been improving. So for Petronet LNG, of course, the company will benefit from resumption of RAS gas long-term volumes also. And people are expecting that the EBITDA for the company could improve by nearly 100% year-on-year and nearly 40% quarter-on-quarter. For even GAIL, the company will be benefiting after the RAS gas renegotiation. And for this company, people are expecting that the EBITDA will be improving by nearly 100% year-on-year and 15% quarter-on-quarter. Keep an eye on the transmission tariff revision order by PNGRB, what the management has to say on it. IGL, keep a very close eye on the volumes because that company will benefit, post that Delhi even odd ruling. So that's a gist for you in the oil and gas space.
All right, Varinder, thanks a lot for that. Rakesh, the market has been giving a bit of a message that they like GAIL and Petronet LNG. And of course, maybe OMCs could surprise positively. How would you look at the oil and gas earnings?
Yeah, clearly, oil prices are down, so only the downstream companies can really benefit out of that. And our favorite is, OMCs, because we think that marketing margins would be, at a pretty all-time high. Plus, GRMs are also healthy at around $6 per barrel. So our pick is HPCL in this whole space, which can positively surprise on the results.
HPCL, not BPCL?
Meaning HPCL is more pure play, and to that extent, BPCL will also benefit, but HPCL is like 100% gainer out there.
Okay. Gautam, to you, what would be your pick in this entire space? There is upstream, there's downstream, or rather the marketers, and there is gas.
So we continue to like the gas exposed names. We've also been pushing that and remain overweight on that part of the piece. Overall, oil and gas and petchem, we are overweight from a strategy perspective. Within upstream and downstream, the valuation, keeping in mind the valuation perspective, our analyst bias is now more towards upstream versus downstream, specifically given where the valuations are. But yeah, in general, the sector is an overweight for us in the strategy. Okay,
Rakesh, the company that's been outperforming for last 2 quarters actually is Reliance. What's the call on that one? Because for last 2 quarters, it's managed to beat the GRM expectations by quite a wide margin.
Yeah, so maybe there are a few things which could work for Reliance going forward also. One is obviously the telecom launch, and with some indications coming that RCom is launching 4G from May, I don't think Reliance Jio launch would be far away. So there was some expectation that probably it would be December, but now it looks that it's likely to be more near term. So So that is one thing to watch out for. The second is, Reliance is also completing a large capex. Their, pet coke-based conversion unit is starting. So that should also add up to earnings. So overall, I think Reliance have few catalysts coming up, and this stock can continue to outperform the market in the near term.
Okay. Thanks for that. Let's now get to the sector where everybody must have some play, auto stocks. Many auto stocks like Hero, TVS and Ashok Leyland have touched fresh 52-week highs in recent days ahead of their Q4 numbers. So will the earnings corroborate the rise in these stock prices? Sonia is here with her analysis of expectations. Sonia.
Well, I'm watching out for 4 auto stocks, and the one that everyone is looking out for is Hero MotoCorp. Remember, the stock is sitting at a fresh 52-week high ahead of its numbers, and the Q4 volume growth has been very healthy at 9.2% year-on-year, coming in at 17.2 lakh units, and the margins are expected to remain strong at 15.8%, led by good revenue growth. Eicher Motors is the other one that has had a stellar performance these last couple of quarters. Royal Enfield continues to grow at a scorching pace. In fact, the revenues for Eicher Motors are expected to grow 60% year-on-year, and the margins are expected to rise 200 basis points quarter-on-quarter to 17.2%. Royal Enfield is expected to report all-time high margins once again in this quarter. For Maruti, things are not looking that good. In fact, the volume growth has slowed down for the company to 4% in this quarter gone by. And a single-digit volume growth will lead to a sales growth of just about 8%. The problem for Maruti really is the way the yen has appreciated and the impact that it will have on the margins. However, that will come with a 1-quarter lag, so we're expecting a big negative impact to come in Q1 of FY17. For this quarter, the yen appreciation will be offset by a 0.5% price hike that the company has taken. And finally, on Ashok Leyland, that stock as well has been sitting at a fresh 52-week high ahead of its earnings. The volume growth has been robust with a pickup in the medium and heavy commercial vehicle sector. So 29% volume growth is what Ashok Leyland has clocked in, and the margins, because of the operating leverage, is expected to rise by 300 basis points year-on-year. All in all, good set of numbers expected from most of the auto companies this quarter.
Yeah, and that's being shown in the market also, Rakesh. We have all two-wheeler companies practically at life highs, except maybe Eicher Motors, which is getting there. In four-wheelers, of course, Maruti has had the problem, but Tata Motors has made a big move over the last couple of months. We have Ashok Leyland at lifetime highs. How would you play this sector now? Do you think this underlying demand is likely to sustain and is likely to sustain valuations from here on?
Yeah, meaning if you look at individual sub-segments, meaning commercial vehicle is doing very well and Ashok Leyland seems to be going up following the numbers. But from two-wheeler and four-wheeler perspective, I think two-wheeler seems to be doing very well in the near term. And, especially the premium motorcycles and scooters is where the growth is coming in. Eicher Motors is our key pick in this whole space. But I think Bajaj Auto, Hero MotoCorp, both these stocks have not done too much in the last 2-3 years. So there's a catching up. So I would tend to think that with rural demand picking up kind of story coming back, two-wheelers can continue to do well even from here on. Tata Motors is the other stock we really like. They are launching F-Pace, which could be a model which can do the same thing to the company what Evoque did 2 years back. This could be a huge volume gainer for them. And Tata Motors, their China business is also stabilizing. So I would think that Tata Motors will continue to perform very well from here on. Maruti, we need to wait and see where the yen stabilizes, and probably that would be the bottom. Maybe we are not very far from the bottom. The correction has already happened, and market-wise, there's no problem for Maruti. They are gaining market share. They're doing very well. It's just that the currency, hit needs to be quantified before people get bullish again.
Absolutely. Well, Gautam, four-wheeler, two-wheeler, auto anchs. Your pick.
So our preferred pick is auto anchs. Four-wheelers obviously is a very dispersed sector. You can't take an overall sector view per se. So we're neutral on that, but preferences on individual names. Two-wheelers we remain underweight. Again, this sector has done well, as Rakesh was pointing out. after not doing much for last 2-3 years. So it could be just a near-term catch-up, specifically given that low base will help numbers and there is hope around rural. But the numbers are already kind of building that in, if you look at estimates, etc., of a reasonable rural recovery. And we should not forget that the two-wheeler concern is also about the industry structure. The competitive intensity is still high and unlikely to abate in a hurry, which will also be a drag. So we still remain underweight on two-wheelers.
Okay, now let's move on to a sector where we have seen a rough ride, clearly due to the US FDA's increased observations of Indian plants. Will quarter reflect these woes, or will recent drug launches offset it? Ekta Batra now will tell us about what we can expect from pharma companies.
Well, the launch of the generic version of cancer drug Gleevec is going to boost the US sales for Sun Pharma, but the steps taken in order to improve or to on the progress of the remediation measures for the Halol plant, which the company received a warning letter from the US FDA for, is going to be the most important. Similar case with Lupin, where the street will be watching out with regards to the commentary on the Form 483 or the observations received for the Goa plant, which is majority of their sales, but the launch of the Glumetza drug, which is a diabetes drug with 6-month exclusivity, will boost the overall numbers for Lupin. For Aurobindo, it's received the maximum amount of approvals amongst the listed space, so that is going to aid their US business, which is expected to see over a 20-odd% growth. But do watch out for commentary in terms of further filings for the US market in terms of drugs as well as guidance. Lastly, Dr. Reddy's expected to be quite sluggish this quarter because of the concerns in the
So over to you, Rakesh. What's your pick of the pack?
Okay, so Sun Pharma is our pick in the large cap space. Clearly, this company is ahead of others in terms of US FDA problems. So it is the first one which is going to come out, and as it was lightly mentioned, that Gleevec is an opportunity which takes care of earnings growth in the near term. So despite the problems at Halol, earnings growth will still be strongly visible for Sun Pharma. Among the mid caps, we like Strides Shashun. That is the stock which can show very sharp earnings growth among the mid cap space. And but generally, the sector is beaten down, and as expectation of some resolution on US FDA approvals for various companies come through, I think re-rating is due here.
Okay, we'll take a final break then on the show. But coming up, 3 sectors which have done well. Anisha will tell us about the key earnings from the infrastructure space. Varinder will tell us about the metals, and Mangalam will tell us about the cement space.